What's up, traders? For those that don't know me, I'm a top author on the TradingView platform and I'm a swing trader. Now, in this video, we will be speaking about gold, giving an update on the last video analysis that I made on gold, since we had some developments, very positive developments actually, and we will now dive deep in the charts. Now, if you haven't got your free training yet, click on the link below and you will have access to your free training. Also, if you're new to the channel, make sure you subscribe. Let's get into the charts. Okay, so let's make an update on the previous analysis on gold we had made. So starting here from the monthly time frame, the first thing we had noticed is that we had this W formation. Now, every time you see a W formation, especially in this case where you see that the W formation is actually overextended, meaning that it has exceeded the first leg here. So basically, what do I mean by this? If you see that the market is creating a W formation, and this is a W formation, normal W formation. So basically the market is in between the neckline, so this high here, and this high here. It's basically inside of this region. Now, when you see a W formation and the market is inside of this region, normally we will see a pullback to the neckline, and then if higher time frames are in confluence with the view on lower time frames, then the market will continue to the upside if they are bullish, or the market will break the neckline and then create a retest and continue to the downside if higher time frames are bearish. So if they're bullish, the neckline will be respected as previous resistance, not or support, or if the higher time frames are bearish, then you will see a break to the downside, a retest, and continuation to the downside. Now, what happens when this basically leg here of the market continues to the upside, forming an overextended W? In the case of an overextended W, what happens is that when you will have a retracement, you will not make it all the way down to the neckline. Usually, since it is overextended, it means that we have a lot of buying pressure and basically we are in a very strong trend. So what will happen is that the market will retrace to the 382 Fibonacci, 38.2. So basically what you're supposed to do in identifying your target for the pullback when you see an overextended W formation is taking your Fibonacci from the low to the high and identifying the 382. And this will be your target. We expect the market to hit the 382 and then continue with the push to the upside. And this is more or less the situation, actually it is exactly the situation that we have on gold. Let's go back on the real chart. So you can see that you have your W formation and you can see that the market has exceeded this high here. So until the market was inside of this region here, we expected it to make a pullback to the neckline. However, the market continued to the upside, creating an overextended W. And as I have just explained, when this happens, so when you have an overextended W, what basically you expect is the market to hit the 382 of the previous Fibonacci. So basically of the 38.2 of the Fibonacci taken on the previous leg. In this case, from this low to this high, as I have just showed you on the basically simplified example. So what are we expecting is the market to hit the 382 and then continue to the push to the upside. And we will speak about the target later on. At the moment, since we're interested in what will happen in the short term, we expect the market to hit the 382 based on the monthly time frame. So what we will do is very simply put a horizontal array just above the 382 and basically have a target in mind from the monthly time frame and move down on lower time frames and see what's going on. So moving down on the weekly time frame, let's see what is happening. Now here in the weekly time frame is clear. This is our target. We can also write it, monthly target. This is our monthly target, and this is what we expect the market to hit. So overall, we're looking for a push to this monthly target. Now on the weekly time frame, you can see that last week the market created this very big rejection candle, and we expected the market to continue to the upside. But we also need to look what's going on the daily time frame. I will show you now why on the daily time frame we didn't really expect continuation to the upside because we had strong resistance, and I will now show you why. But at the moment, let's speak about what's going on now. At the moment we had this strong rejection, but overall, as I will show you on the daily time frame, we can expect continuation to the downside as the monthly target hasn't hit yet. This rejection might have just been a fake and the market is supposed to continue to the downside, hit the monthly target, take out all the stops of the people that basically put their stops below this area, and then continue to the upside. This is overall what we expect for the reasons I'm about to show you on the daily time frame. So let's go on the daily and let's see what's going on the daily. Now on the daily time frame, we can see that our monthly target is here. Let's move it so we can see it. Perfect. Now what kind of price action we're getting on the daily time frame? On the daily, we have a very strong impulse to the downside, followed by a two-wave correction pattern. At this point, what you're expecting is continuation to the downside. That is the most simple pattern you will find in the market. The market makes an impulse, the market makes a correction, and then the market continues with the impulse to the downside. So impulse, correction, impulse. And the low the market will create here is lower than the low the market will create here. So overall, it's pretty clear that we can expect impulse, correction, and continuation to our monthly target. Further confluence for our basically view of the market as a bearish market, we also have the further confluence of this trend line. As you can see, the market had created a high here, another high here, and now the market is rejecting this trend line, creating also a daily double top. As you can see, the market failed to break above this level, so basically creating a double top. So at the moment, what we can expect from the market is to continue with the push to the downside. Overall, we already have our target. Now what we need to monitor basically is the price action here on the daily time frame. Let's look at what's going on. It's pretty clear that we do have a very strong area of support here. And you can see this also by looking left. You don't really need to look only at the most recent price action. Look left. This level was respected by the market many times. Was support here, it was support here, it was support here. The market rejected it again here, broke below, so fake breakout of the level, went back up, went for a retest of the level. Now if you remember, I told you guys on TradingView, be ready for the market to move from this area to this area and then from this area to this area. And that is exactly what happened. And the reason is simple market structure, nothing crazy. But what we really need to know, basically, so the only area at the moment that we really need is we know that we have this target and we know that we have strong support at this area. So keeping charts as clean as possible, because that is what you're supposed to do. What you need to do before you can execute a position on gold, you need to see the market close below this area on the daily time frame. Now once the market will close below this area on the daily time frame, you can expect a retest of the area on lower time frames, aka the 4-hour time frame, before you can see continuation to the downside on gold. Now let's go on the 4-hour time frame and see what's going on. But keep in mind that until the market will close on the daily time frame below this area, we are overall still in an uptrend. Because yes, it's true, the market has created a double top, but it's also true that the market never created a lower low. So overall, we are still basically, if you look at the correction, we are still basically creating a higher low. So we're basically still stuck in this range. So until you see a break to the downside, only at that point you can move down on the 4-hour time frame, perfect your entry, and you will have a very good risk to reward to the downside. So moving down on the 4-hour time frame, let's see what's going on. Now here on the 4 hours, you can clearly see that this is the area that we're actually interested in. So it is clear that we have strong selling pressure to the downside. The market has created a nice impulse to the downside, made a correction, and obviously respected the previous support, turned resistance. So overall, the market is respecting market structure extremely well. But as we already said, we have strong support around this area. Now what we need to do before we can execute a position is basically see the market close below this area, go for a retest. At that point, we will have a very good risk to reward to the downside here on gold. We can take our entry on the retest of this area, and we already know our target. We can basically take at least a 1 to 3 risk to reward, since the market will have created a big push to the downside, retested the area, the stop loss can go all the way above here, and at that point you can see that we will have more than a 1 to 3 risk to reward on gold. So overall, let's go back on the daily, and it's pretty clear what are we expecting on gold is first a break of this level, then on the retest we can be looking for shorts, not before. We need to see a clear break of this area, of the support area, before we can be looking for shorts, because overall from a structural point of view, until the market is above this area, we are still in bullish territory, so we cannot short it. If you enjoyed the video, make sure you leave a like and comment below, because it really does support the creation of more content like this and the creation of more video analysis and free content for you guys. If you didn't get your free training yet, make sure you click on the link below and you will be able to get it. If you have any question, you can also post it in the comments below, and I will see you in the next video.